Every farmer knows a strong season starts long before the planter rolls. At Landis, our agronomists are here to help you choose the right seed for your fields and protect it with acre-edge seed treatments that give your crop a stronger, healthier start. And with flexible financing options, it's easier than ever to plan ahead, manage cash flow, and capture early season savings. Talk with your local Landis agronomist today and plant with confidence.
This episode is brought to you by Nature's Bounty. Nature's Bounty believes your body is brilliant, naturally designed to thrive, inside and out. For those always looking for new ways to support your health from head to heels, Nature's Bounty has a range of over 400 vitamins and supplements born from 50 years of trust and care. Nature's Bounty. It's in your nature. Visit naturesbounty.com to learn more.
Welcome to Farm Here Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Here Daily, the Iowa Farm Bureau has its annual meeting. We chat with economist Christopher Pudenz about some of the big topics going on, along with a review of 2025 and expectations of 2026. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining me on Farm Here Daily, we are at the Iowa Farm Bureau annual review, annual look behind the annual meeting that we have here. And joining me is Christopher Pudenz with the Iowa Farm Bureau. He's an economist here, and you've been talking all sorts of the latest news that we've had here the last couple of days, and notably yesterday with the announcement from the Trump administration. Christopher, thank you so much for joining us first off, and tell us a little about what we learned yesterday.
David, thank you for having me again here on the Farm Here Daily podcast. Yes, big news yesterday out of the White House. The administration announced that we are going to get these farmer bridge payments in February of 2026.
Do we know very much about what those payments are like?
We do not know very much about these things at all right now. We know generally what commodities they cover, at least the crops that have been announced. We know that we won't know more until after the 19th, so if you haven't certified your acres yet, get out and certify those. We know there's going to be some sort of complicated formula. At least they're saying there's a lot of variables involved that determine what the payment for each farmer will actually be, and other than that, they're going to start going out in late February. Other than that, we don't know much. I've been hearing, I hesitate to even say this because your listeners, who knows what this is going to end up being, but I've heard two different estimates today. I've heard $36 an acre and I've heard $50 an acre. So who knows? It could be $3 an acre. I have no idea, but 36 and 50 are the two numbers that I've heard rolling around.
This money is allegedly going to be supported from tariffs, and tariffs have been a pretty big part of what has affected mainly input prices for farmers, but also many other things as well as our exports. When you look at the amount that folks in the farm community have struggled with there, and the numbers that you just spoke of, what do you think would be fair as we look into that?
Yeah, the discussion of where this money is coming from, it was funny because the president said in his announcement that it's going to be funded by tariffs, and then later the Secretary of Agriculture said, well, it's coming from the CCC, but don't worry, tariffs are going to offset the spending. So that's kind of an interesting wrinkle there. It will come out of the CCC, which did get re-upped again in this recent spending deal that the Senate, argued about for however many days was our shutdown. I forget how many days it was. It was a long
Too long.
Too long, yes. And so the CCC got refilled there, and that's where the money is going to come from. How much is fair? I don't know. Economists don't like to talk about fair, right? Like we like to talk about, things in an objective sense. But the reality is, and these tariff payments are an admission of that, the reality is that farmers have been harmed by tariffs. And hopefully this payment does a little bit to make farmers whole for the extra costs that they've incurred and also the lost markets that they've experienced, especially the lost Chinese soybean market, to a lesser extent perhaps the lost Chinese pork market, which has been impacted. And then the Chinese beef market disappearing has actually been a pretty big deal for the beef industry as well. There's just so many other things going on in the beef industry that one has kind of fallen through the cracks.
You've spoken on acreage returns potentially, but a big impact that we've seen specifically in Iowa, pork, beef, you just mentioned, our egg production. Have we seen any notes on how those might be supported, or is that still unknown?
That's still unknown. If there's anything out there, I haven't seen it yet. I'm sure more and more will come out in the coming days and weeks.
A part of this conversation also reflects on we still have much to learn about what exactly has happened in 2025. So as you look at this annual meeting here at the Iowa Farm Bureau in Des Moines and you talk with folks and you look at the data you've had and received yourself and the data that has just come out with the WASD, some farm income numbers, what is the state of what we can know about 2025 as we look at the potential injuries we've seen to our producers?
2025 was certainly a mixed bag here in the state of Iowa, definitely a tale of two economies. You have the row crop economy, which had a pretty rough go. Input costs were high. It was one of the most expensive crops that has ever been put in the ground here in the state. And crop prices were relatively low for most of the year. I heard one analyst say, and they said that this was the first time ever, is what they had said. I haven't verified that independently, but the first time ever that the futures markets for corn didn't trade above the spring pre-planting price set in February. Which, if that checks out, and I believe us analysts, that's crazy, right? So just not a particularly good year for providing folks with opportunities to market their crops before harvest. Mizzou, in conjunction with Iowa State, says that net farm income in Iowa in 2025 was $12.32 billion, which, according to their calculations, is actually up 76% from 2024. But $2.38 billion of that was government payments. We had ECAP this year. Also, this is where that other side, a tale of two farm economies, the other farm economy comes in. A good chunk of that increase is in livestock receipts. Cattle had a very strong 2025, cattle feeding and cow-calf, which we have both of those in the state. Swine had a better year than folks were expecting. So if you go to Iowa State's estimated returns model on their website, curated by Lee Schultz and Card, it's been one of the best years in a long time. I'm not sure if it's the best year ever. We'll wait to see what it ends up being when 2025 comes to a close. But you have this struggling row crop economy on the one hand, and then you have this really robust livestock economy on the other hand. Can we keep that up going into 2026? I don't know. Right? What information do we have? Well, we have information that the 2025 corn crop, the WASD, just out today, confirmed that yields were 186 bushels an acre, which is what they said last month as well. Will we see that retreat a little further come January, February, when they release, yields that are more approximately final? We'll see. And what's going to happen, I'm going to talk about cattle here, like what's going to happen with cattle, right? So many news items with cattle recently, with all the Argentina tweet stuff, the Brazilian beef tariff getting dropped substantially. You have Tyson closing their Lexington, Nebraska plant, probably in the new year. They announced it. I think it's going to happen in the new year sometime. They're taking Amarillo down to a single shift instead of two shifts. So lots of fed cattle capacity going offline here to start 2026. It'll be interesting to see how robust prices and, more importantly, margins remain for feedlots. Cow-calf folks, right? They're living in some of the best times they've ever seen, just with supplies being so tight. If you have cattle, you're making good money on them, almost certainly. But those feedlot folks, those folks in the middle, when they're trying to run that margin, are they able to make it work in 2026 the way they did in 2025? That's yet to be seen.
I appreciate you bringing up cattle because there are a lot of concerns in that arena. We have historically low numbers in terms of supply, and we've had a couple of years where this has gone on. So we've had more folks invest at a higher level because of the increasing cost of heifers and calves. If we see issues like what you mentioned, Argentina, other locations around the world being brought up, are we going to see a situation like we saw in 2014 where there was a pretty hefty decline in cattle prices and that causing many producers to struggle?
I was with a group of cattle producers this morning. We were talking about the markets, and I asked them, what would it take to get you to rebuild your herd, right? First of all, I said, if I show of hands who's rebuilding their herd, and I don't know, a couple people raised their hands, right? I said, is anyone shrinking their herd? And no one was shrinking their herd, but most folks I would say were either just replacing cows, retaining enough heifers to replace cows, or they were growing their herd slightly. I said, what would it take to get a full-blown rebuild? And at the end of the day, it's profitability, right? One of the things they brought up is they said, so many folks bought really expensive, bred heifers or cows in 2014, and then the market just fell out of bed in 2015. And they were trying to figure out, how are we going to pay these cows off? And maybe they paid them off 7 to 10 years later, with high coal prices in the last couple of years. And so, yes, that's exactly the question that folks are asking. There's so much uncertainty in the market, right? You have a single relatively small news item moving live cattle prices, fed cattle prices right on the board, limit moves. It's absolutely wild. Another analyst from American Farm Bureau, he said a statistic this morning and it stuck with me. He said in the last 30 trading days, 10 of those days, so 30%, so maybe 9, 10, whatever. He said 30% of the trading days in the last 30% of the days in the last 30 trading days have been limit moves. That's crazy, right?
That's wild, yeah. I've seen it. I've seen it go, $7 up, $7 down, $13 up, $13 down. It has been a very volatile market.
Yeah, and so how do you make 3, 4, 5-year decisions for your cow-calf herd when there's that much volatility? And that really is, I think, causing people to think twice about, really kickstarting herd expansion, even though the money's there right now, but will it be there 2, 3, 4 years into the future?
Looking into the future, at the annual meeting here at the Iowa Farm Bureau, it is a good opportunity to speculate or take what we know and apply it to 2026. We know it's been a really tough year for row crop producers, and we know that soybeans are doing better than corn quite a bit when it comes to profitability at the moment. So as we look into 2026, are we expecting pretty big shifts in acreage for our producers here? And are we looking at a situation where folks are able to make those decisions right now?
The reality is, David, that in order for corn to be profitable, we need acres to shift out of corn. We can't plant 99 million acres of corn again and expect to make any money on those acres. And perhaps that's hard truth, but that is the reality. And so I think a lot of those will go into soybeans. If you look at just soybean cash prices, where they were today, despite all the trade stuff, where soybean cash prices are today, in some instances, they're $1 a bushel higher than where they were last year. And that probably will attract some soybean acres again. And every acre of land that goes from corn into soybeans, sure, it might drive down soybean prices, but it helps corn be a little bit more profitable, right? Just as you look at national, but then global supply and demand for those. So I think that you will see some acres shift out of corn into soybeans. We'll have more information about those sorts of things this spring from USDA. Looking forward with livestock, can corn and soybeans keep up this, can cattle and hogs keep up this tear that they've been on here in 2025? Well, according to USDA, they think livestock receipts are going to be about flat for Iowa in 2026. Yep, that's a USDA data, and then Mizzou in conjunction with Iowa State layer some modeling on top of that to get some estimates for 2026. And they say that livestock receipts are supposedly supposed to be flat for 2026. So that's good news, right? We'll see. It's a forecast, and it's only December of 2025, so we don't know. But the silver lining of cheap corn and soybean, especially soybean meal prices, is that's cheap feed for cattle and hogs. So you can think of pigs as their little four-legged torpedoes of corn and soybean meal, right? Like that's what they are.
Yep.
And they, help corn and soybeans disappear, which is good for demand. And then we ship that all over the world, right? And so it's encouraging that Mizzou and Iowa State at least think that livestock receipts will be flat from a good year, right? From a good year that we had in 2025.
Something I think about too as we move forward is I have noticed cattle seeing at extremely high prices, but still seeing really, really good demand. You would imagine folks would go to the pork chop if the price got a little too high, but folks are not doing that. What are we doing in the hog market, in the hog side of things, to potentially do something similar? Maybe have higher weights, more fatty hogs, more versions of premium cuts. Are we working on that? Is that an idea as we look at our hog demand?
So I'll take that question in sort of two steps. The first step is what's going on with beef demand. Beef demand is very, very robust. The Livestock Marketing Information Center publishes some demand indices for various meats, but for beef, their quarter one demand for 2025 was up 10%. 10%-ish from 2024, and their quarter two demand for 2025 was up 10%-ish from 2024, and 2024 demand was already very robust. So like really, really strong beef demand. What's going on there? There's been this increasing discussion regarding the so-called K-shaped recovery. I don't know if you've heard of that. Wall Street Journal and places like that have been talking about it. And basically the idea is that coming out of COVID, folks who have a lot of stocks are feeling very good about their financial situation. And folks who don't feel pretty crummy about their financial situation. And you see this show up in University of Michigan's consumer sentiment indices. They break it out by stock holdings. And if you're holding stocks, you feel pretty good about the economy. Now, folks in Iowa or folks in the Midwest, there's this culture of eating red meat that doesn't necessarily exist in all parts of the country, right? But imagine someone in, I don't know, South Carolina, right? Or imagine someone in Georgia, and they go to the grocery store, or pick New York, right? Imagine someone in New York City and they go to the grocery store. If they were buying steak 2 or 3 years ago and they have a lot of stocks, they're still going to be buying steak.
Right.
Or if they're going to a fancy steak restaurant, they're still going to be going to the fancy steak restaurant, right? Whereas if folks in those places, if they're feeling a pinch in their pocketbook, they've pulled back. So I think you see this quote unquote K-shaped, right? Stocks have gone up. And I think those folks who have lots of assets feel pretty good about their financial situation, and they're still buying beef. So I think that's a big part of it. I also think the restaurant business is very good for beef. So I think that's a good chunk of why beef demand has been so strong, is that quote unquote K-shaped recovery, that top part of that K leg going up. Now, what about pork? Now, something that pork has been a beneficiary of this year is pork demand has been pretty strong too, right? And the National Pork Board just rolled out this program called Taste What Pork Can Do. David Newman had a vice president role that was kind of in charge of that program, and now he's become the CEO of Pork Board, and I think the results are still out, right? Like we don't know what effects that's having yet, but I have heard very positive things about the way that that's impacting pork demand. One of the things that they're doing is they're saying, like one of their taglines is use pork to sell pork, right? People love bacon. So how can you use bacon to sell pork chops, right? How can you create that association in people's minds between this delicious, flavorful, marbled bacon and a pork chop? And I think that they are doing some really creative, very targeted marketing, say in coastal markets and things like that, urban markets, in order to try and create that association and drive more value to the pork carcass, and then, of course, ultimately back to the farmer. So that's I think what's where the discussion is right now in the pork side of things.
I want to wrap up our conversation to talk about a challenge as we move into 2026, but also some of the hopes, some of the things we're looking forward to, right? We'll start with the challenge, and that is generally farm economy. We spoke at the beginning about this bridge that we might be seeing here. We don't know too much about it, but the fact of the matter is that there are a lot of farmers who are going to be struggling as they look at their sheets, as they try to come up with what type of inputs they buy, when they buy it. What are we doing and what are we seeing to help producers overcome the stress of that?
I think that 2026 is going to be a year where folks, they aren't going to just by default do everything the exact same way that they've always done it. And I think that means something different for every farm, right? I can't prescribe what that needs to be, but I think 2026 is probably going to be a year, even with the bridge payments, even with ARC and PLC payments coming this fall. I think 2026 is probably going to have to be a year where folks think about diversifying in a way that they haven't diversified before. I think folks are going to have to think about looking at, like, say, inputs. Like, is that input, do I need to be using that input in that quantity, right? And so there's a whole list of questions, and I can't pretend to know all of them, but I think that folks are going to have to really, really evaluate those sorts of things in 2026.
Then something to look forward to, kind of end this conversation here at the annual meeting here. What are folks looking forward to in 2026? What is the optimism, the hope as we move forward past this tougher year?
There are serious reasons to be optimistic for 2026 on into the future. One of them is hopefully we're going to get some of this trade stuff tied up. I've seen numbers from U.S. Meat Export Federation and just even like the Southeast Asian frameworks that the administration has put together are worth hundreds of millions of dollars a year. If just we remove some of those non-tariff trade barriers that are so prevalent in that region, like the plant listings and things like that are just ridiculous protectionism, right? If we can solve some of those things, there are hundreds of millions of dollars worth of pork and beef market potential in, say, Southeast Asia, right? So I think that's something to be optimistic about. Hopefully we're moving through the worst of these trade disruptions. I also think there is some serious optimism, at least a lot of push for year-round E15 access, which, if accomplished, would be beneficial to corn farmers here in Iowa and around the country. I also just think that a reason to be optimistic is for several years there, it seemed as if there was just no motion at all on most ag policy. There were no trade disruptions because there were no trade conversations happening. Like,
Good point.
And the ball wasn't moving forward or backward. It just wasn't moving. It was like someone had hit it and taken it home. And so for there to be the ball moving forward, hopefully, right, on trade policy, it seems as if there is some progress being made there. Southeast Asia, like I mentioned, with non-tariff trade barriers. UK, we've had some good luck there. The EU deforestation regulation got delayed another year, right? Like the timing of that was announced initially, almost coincidentally with the EU trade deal, right? So I don't believe in that kind of coincidence. Agricultural trade is in every single one of these conversations. I've spoken with folks who would know, and they say that to the highest levels of the administration, all the way to the Oval Office, it is an absolute reality that as the United States is negotiating these frameworks with other countries, trade is part of every single one of those conversations. Ag trade specifically, I mean. Agriculture has a seat at the table, and folks, the negotiators, are doing their best to get more value abroad for our farmers here in the state of Iowa. So I think that's something to be optimistic about, and hopefully we're through the worst of the mess. So
Something to be optimistic about with Christopher Pudenz of the Iowa Farm Bureau, an economist here at the annual convention. Christopher, thank you so much for joining us on Farm Your Daily.
Thanks again, David. Look forward to chatting with you again sometime.
This is Farm Your Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.
Hey, Ryan Reynolds here for Mint Mobile. You know, one of the perks about having 4 kids that you know about is actually getting a direct line to the big man up north. Mm-hmm. And this year, he wants you to know the best gift that you can give someone is the gift of Mint Mobile's unlimited wireless for $15 a month. Now, you don't even need to wrap it. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Discover Mercer Lab's Museum of Art and Technology in New York City, where creativity meets innovation. This holiday season, immerse yourself in a world of interactive exhibits, digital masterpieces, and unforgettable experiences. Whether you're with family, friends, or exploring solo, Mercer Labs invites you to see art and technology in a whole new light. Get your tickets now at mercerlabs.com and redefine your museum experience.